Hello, welcome to BQ. We're talking Sami Group today because there is an acquisition they have done in the Japanese market, acquired H4W. It's an arm of Honda Plus, and it's into the manufacturing of sunroof and oil tanks. And joining me is Laksh Sehgal, who is the director at Sehgal, and Kunal, who is the CFO at the company. Gentlemen, thank you very much for joining us on Q Prime. Laksh, let me get you directly. There's a big deal and an entry into the Japanese OE market. Uh, how much actually you have paid for the 81%, and do you have agreed to take the 81 100% going forward?
Thank you very much for having us on the show. I think, first of all, it's very important to highlight that Honda-san has exclusively picked Motherson for this transaction, and retaining a stake in this company really shows the value they put on Motherson, and a very unique opportunity for Motherson as well, of course, being able to supply to Honda-san with our global product offering that we have. Of course, Honda-san has very clearly indicated that they are holding on to this 19% for the medium term. How long and what happens in the future, of course, we will discuss with our customer. But the most significant aspect is that, look, they have strategic leadership in the products that they are doing today, not just the sunroofs and the fuel tanks, but they have a very rich history of R&D. They have three locations which do that. Not only with these two products, but they've also developed plastic tailgates and also assembled complete vehicles for Honda-san in the past. So, getting into a partnership with a company like that under the guidance of Honda-san is, I think, a real privilege, and will open up significant gates for Motherson, regardless of the shareholding. But just the fact that they will continue to hold it even after the transaction is a big boost for us and shows us how much they value the Motherson partnership.
You are entering into an agreement with Honda, which will allow you to get revenues or 6,500 plus crores if I see FY23 numbers. But you have a long-term agreement to supply to the entire Honda group as well.
Look, of course, the company that we're acquiring is a running company. So any contracts that you have will obviously live out the life of the program. Of course, this company has a long history of supplying to Honda-san. It has global locations. So, of course, nothing really changes over there. This company will continue to offer its plethora of products to Honda-san as they come up with the new offerings as well. On top of that, Motherson will have an opportunity to bring our existing product portfolio to be able to bring to Honda-san's new offerings as well. Our idea is to, together with Honda-san and together with the Yachiyo management, focus on the growth of this company. The products that they are in, they are the leaders. They have the lion's share of Honda-san's business for this. And as we know, Honda-san creates one of the some of the best cars in the world with very high quality requirements. So we believe that these products that Yachiyo is offering are state of the art, will be attractive to other customers as well, and definitely Honda-san will continue to source from this company.
Kunal, can you take us through the margin picture? How will it be accretive to your overall group margins?
Yes, so the business is already tracking at 11.2% odd as per the last financial results, and hence would be accretive to where we are right now. It will also be an EPS accretive transaction. So all in all, it's all positive and green from financials perspective.
What about the funding part of it?
So the asset is being bought for around about, let's say, 117, 118 million euros for the 81% stake. It will be funded out of debt. And in spite of all this and all the announced transactions so far, we do not see the debt actually being very different from where it is, or certainly below 2x, maybe closer to where we are is how we see by the time this transaction is closing.
You will end up with a net debt of nearly $1 billion after this transaction. You have what, 7,400 crores of net debt at the end of FY23, and another 1,000 odd crores that will come in here. Is there a plan to raise equity as well to reduce your debt?
So along with the debt, there is a profitability also that is coming in. And in reality, there is 540 million euros, which will be paid also for SAS, besides some of the other smaller acquisitions that have also been announced. So all in all, the debt will actually go up much above $1 billion for sure. But correspondingly, we would have profitability also getting played out. So at an aggregate level, as I said, the net debt to EBITDA should be still much below our financial policy of 2.5 times. As I said, much below 2x. And hence, really don't see a need for raising equity for the announced transaction so far.
Because you've been very aggressive since 2022, 7 acquisitions so far. Laksh, it's is there enough powder with you to stomach more, or you will like to consolidate a position and then take it forward from here?
Look, we have a very clear target for 2025 to be 36 billion. So still a while to go for that. And look, we've been patient. When the market was really bouncing back and the interest rates were significantly lower. We were patient. We did not do deals that where we could not see a path to a 40% ROCE. We've been waiting for the customer to guide us. And as you can see, these are very strategic acquisitions that Motherson is doing. In fact, we're closer to the 10 mark already from 2022, all of different shapes and sizes, and also for the new verticals. So I would say all of Motherson's cylinders are firing. Of course, as the market conditions are tough, more opportunities come to the fold. Also, more attractive valuations come to the market as well. So, we continue to stay disciplined, we continue to stay balanced, and we follow our customer. And I believe definitely we will have more opportunities and get very close to our target for 2025.
Is there a plan to bring in some of this high-cost manufacturing from Japan to India?
No, Motherson doesn't believe in shifting production from one location to the other. We've always believed that production has to be sustainable locally. These are all parts which again, require real-time engineering with the customer, need to be supported close to the customer, not specifically freight-friendly. I'm talking in general. So, the idea is definitely not to move production all to India or something like that. Of course, there are strategic buys, there are child parts, there are smaller parts which can be efficiently driven from other locations as well. But we believe that local plants have to be locally competitive and serve the local customer. That takes out, forex risk, that takes out a lot of the other translation risks that can be there in the business, logistic costs which could be there, which as we know in the last few years have also been quite volatile. So we look at acquisitions from a very long-term strategic process and making sure that all locations, regardless of where they are, high cost, low cost, are able to really be competitive and drive to the customer's expectations and deliver to their quality.
When do you plan to close this transaction?
Kunal, I think the
Q1 FY25. Yeah.
Okay, and by then, I think your other acquisitions would have also closed. So what kind of top line are we looking at?
So look, from our Route 36 perspective, we are already at 12.7 billion. On gross revenue basis, SAS will add another 5 billion. This plus all the other assets that we've announced so far is probably $1 billion plus as well. So altogether, we are hitting again closer to the 19-20 billion mark by the time Q1 FY25. And hopefully, we have the stomach to digest some more.
Yeah, from 19 to 36, roughly 17 billion more to go. Is it going to be entirely through inorganic, or is it going to be some bit of organic as well coming in?
So there would be organic for sure. Our order book is at its all-time high, nearly $70 billion of order book, 20% of that being EVs. So as you know, many of the premiumization, EV, SUV, these are all trends which are adding a lot of content. As you've seen in the last quarter and last multiple quarters now, we've been delivering better and better revenues. So clearly, organic growth is certainly playing out, and this, mind you, at a time when the global market production is still around about 15% lower than pre-COVID levels. So there is a fair amount of let's say headroom available on the organic side. Uh, yeah, part of our route will simply be.
I was about to ask you that because we are facing a slowdown in some of the key markets where you are, and you are on an aggressive inorganic growth phase. Uh, where is the growth going to come in from? You've acquired many of the marquee properties or assets, and going forward, if the slowdown continues for another 12 months, is there a risk to the Route 36 that we've talked about? Laksh?
Look, Motherson always aspires for high targets, and please keep in mind that these targets were announced even before we knew that COVID was around the corner in 2020. But that didn't deter us. We didn't reduce our targets over the last couple of years. We've stayed focused. We've stayed disciplined. I think Motherson has always believed top line is vanity, bottom line is sanity, cash in the bank is reality. So really no shame to come back and say, look, we didn't hit 36 billion, we hit 35 or 34. But I think the real focus is following the customer, making sure that we go after targets where we see a path to a 40% growth, play out this diversification strategy which is coming in, and continue to stay financially disciplined as we have. And believe me, in the market that we're seeing today, and like you said, if the slowdown continues, even more opportunities will come to the market that perhaps were not available or were priced too high in the past, and we believe we'll have a good shot at it. So Motherson won't stop believing till the 31st of March 2025 that the target is within reach. But like I said, we will stay extremely disciplined, extremely focused, and we've already come from I think 8, 9 odd to close to 20, like Kunal is saying. So that performance is not bad in the market condition that we are. But like I said, we're still staying focused on our 2025 target, and we'll continue to aim to get there in the time frame.
Does it mean that you will have to come to the market to raise equity at some point in time, either through strategic stake sale or through investors coming in, or financial investors coming in?
Look, our equity is very dear to us, as it is, I'm sure, with every equity holder. But definitely for the growth of the company, if there is somewhere where we see that the leverage ratios are being crossed or something like that, we will have a key discussion with Kunal, the entire team, to see how the finances are looking. And if that is a strategic asset, something where the customer and is telling us to go, ticks all the boxes, we do see a path to 40% growth, hey, we are open to discussing it. But in current context, we have significant headroom. Assets that we are looking at are not requiring a very large equity checks. We are quite capable to raise debt in our books and stay well below our thresholds. So I think every opportunity will play out as it plays out. But in Motherson, we have an open mind, and but at this time, we don't see any equity that's required to get to that target.
Kunal, what about cash flows, free cash flows? Do you see enough cash flows coming in to help achieve that 36 billion mark?
Yeah, absolutely. So, look, as with the market still, as I said, being 15% lower, obviously capacity expansions are not the need. So whatever capacity expansion that we are also doing is more in the emerging markets and more specifically in India, where there might be a constraint as India goes through its own growth curve. But in the developed world, clearly there is no capacity expansion that is really required. So that means that will be a benign piece, the capex piece. And with stronger players becoming stronger, given the balance sheet strength that we have, we do tend to get hopefully a disproportionate share of new business as well. And that augurs well to be able to then deliver better margins, better free cash flows, and so on. So if I just look at organic business, we should be on a deleveraging path going ahead as well. So all debt that is frankly getting added on is largely driven out of the inorganic piece, with the organic piece really still continuing to deliver.
Laksh, so many acquisitions. One of the biggest challenges in M&A and across geographies which you're doing is the integration and synergies, driving synergies from all these acquisitions. How tough will it be for you? Because you have set yourself for aggressive targets, and now consolidation and synergizing the entire business and driving growth through it, it will be the biggest challenge for you. And as Kunal and you have said, the appetite for acquisition is not over yet.
Yeah, look, I think it's a challenge that I share together with my team. Team is extremely capable. We have an international team. We have a culturally diverse team, and we're very open. And I think the Motherson DNA, which we have built, and the Motherson culture is a very open culture. It's a culture that is constantly evolving. It's taking in more and more learnings from all these new family members that we're adding to the company and to Motherson Group. So, we've already done that in the past multiple times. So I see this as really no different. We have to be open, we have to be receptive, and see the good in everything that's coming in, and also bring the good of Motherson to these companies. So when we do acquisitions, it's not like we send a plane of full of Indians or something like that to take that acquisition over. We always believe in the local strength of the acquisition, the local face of the acquisition, and growth has to be there done locally. So whether it's a new plant opening in India or a plant in Japan or a plant in Germany, it has to be locally driven, and sharing of good practices and culture within the Motherson Group. And that's worked phenomenally for us in the past, and that's something that we will ensure that stays intact no matter how many acquisitions we do.
Finally, Laksh, the acquisition which you made, does it allow you to go to other OEMs also in other geographies? Because Honda being a competitor for many of the large players globally, will that be a challenge for you?
I think this is the reason why Honda Sun has picked Motherson to be a partner in this asset. And obviously, Honda Sun will hold 19%. The majority will be held by Motherson, and our diverse customer base will be attracted to this product portfolio. The technology requirements for these products are very, very high in terms of quality. Sunroof cuts the entire roof of the car. There cannot be any leakages of water, etc. So again, very, very high standards of quality, and Honda Sun is known in the market to have high quality vehicles, high standards of quality expected from all the supply base, all the products. So we don't really see that as a big challenge. Seeing the footprint of Yachiyo, where they are located in the world, there are other customers located close by. And of course, the focus has been to support Honda Sun, but now really together with Motherson, the idea is to take this product offering to all the other customers where Motherson is already supplying to, and also bring Motherson's products to Honda Sun as they become more meaningful in our customer split. So really, we've done this in the past. We continue the winning formula with this acquisition as well. And being handpicked by Honda Sun is a real honor, and surely together with them, we will make this a success with other customers as well. I think there's high levels of respect for any supplier that has been able to reach those kind of levels of supplies with Honda Motor Company.
Finally, there's one leg of transaction which has to be completed by Honda before this transaction comes true. Do you see any challenges there? Because Honda will have to out its minority shareholders and then transfer the asset, the two-wheeler assets, to a different entity. So, do you see some challenges there with respect to buying out of public shareholding or squeezing out of public going forward? And will that plan get stretched beyond the first quarter of 2025?
So, Sajid, as you're aware, Honda Sun already owns 50.4. So the tender offer route, they need to get to 66.67, or two-thirds of the business. So that's effectively just about 16% is what they need to get. Now, being both the largest shareholder as well as the single most important customer, I find it very difficult for people to believe that there is any challenge to getting this through to at least the two-thirds level. And as per Japanese regulations, once you're there, you can get and take this private thereon. So directionally, we do not think this is going to be a challenge, and more so coming that the tender offer is coming from the customer directly. So hence we don't anticipate a challenge. Clearly, after it is private, the purchase of two-wheeler business would also be pre-agreed with Yachiyo, and then it's simply be buying 81% in the remaining four-wheeler business that is there. So all in all, I don't think this should be a challenge, is the way we see it at least.
Gentlemen, it was a pleasure talking to you. Thank you very much, and all the best for this transaction.
Thank you. Thank you so much.
Thank you so much.
Thank you.